So you hear about digital assets, right? NFTs, Bitcoin mining, stories of these incredible gains. It definitely grabs your attention.
Oh, absolutely. Big potential.
But then you also get these whispers, sometimes louder than whispers, about things going sideways, allegations.
Yeah, and that's where it gets complicated, where the excitement meets some pretty basic questions about trust, about money management.
Exactly. Okay, let's unpack this, because today we're doing a deep dive into a story that, well, it really makes you think about what's potentially happening behind that digital curtain.
It's a fascinating case, definitely, and maybe a bit concerning, too.
Right. So our mission today is to really get into the details of a recent legal filing. We're drawing mainly from a Cointelegraph news report out of Illinois.
Yeah, solid source for this kind of thing.
And we're not, speculating on market trends here. This is about looking at concrete allegations, mismanagement. We're talking potentially significant sums of money, and what this might signal for anyone, thinking about investing in this space.
Or already in it. And you've got basically two sides here. There's Jonathan Mills, he's the founder of Hashling NFT, and also this Bitcoin mining operation, Satoshi Labs, LLC.
Which used to be Proof of Work Labs, LLC, right?
Exactly, name change there. And then on the other side, you've got a group of his former business partners, investors, including a guy named Dustin Stearman. They're the ones suing Mills.
Okay, so let's start at the beginning. It seems like this whole thing kicked off with the Hashling NFT project.
Mm-hmm.
And what really stood out to me in that report was apparently Mills told Stearman right at the start that he didn't really have the funds or even the NFT know-how.
Yeah, that's a really crucial starting point, isn't it? He admits he's lacking the resources, the experience in NFTs specifically.
I went ahead anyway.
Seems so. Mills and Stearman decided to collaborate on Hashling. And to get it going, they had to bring in other investors, people with skills in, art, marketing. Someone even went to conferences for the project.
Okay, so pulling together a team.
Right. And the report mentions Mills' girlfriend also invested money.
And it sounds like, at least initially, it worked. They had some success.
They did. The report mentions 2 NFT drops. One was on the Solana blockchain, the other on Bitcoin.
And they raised actual money.
Yeah, quite a bit, actually. Combined, those 2 drops brought in $1.46 million.
Wow, okay. $1.46 million. That's substantial.
It is. But this is where the story takes a sharp turn.
Uh-oh.
The plaintiffs, so Stearman and the others, they're alleging that Mills misappropriated millions in profits.
Millions, not just the $1.46 million.
No, allegedly more. Profits from the Hashling NFTs, plus they claim at least $3 million from the Bitcoin mining operation.
Whoa. Okay, so where did they say the money went?
They allege he essentially lied about transferring these assets, the money and presumably crypto assets too, into his holding company, Satoshi Labs, LLC.
So the investors are basically saying, hey, we put in our cash, our time, our skills. The project's made money.
A lot of money.
A lot of money, but we haven't seen the equity returns we were promised. Is that the core of it?
That's a huge part of it. And then, according to the report, Mills just vanished on them communication-wise. He apparently ghosted them right after these successful NFT launches.
Ghosted them. Just stop talking.
That's the allegation. That kind of sudden silence, especially when you're talking about financials, that's a massive red flag in any kind of partnership.
Absolutely.
And it gets worse. They also allege Mills created this shareholder agreement for Proof of Work Labs. That's the original name for Satoshi Labs.
Okay.
And they claim this agreement wasn't just flawed, it was deliberately structured to basically give him total control over all the project assets, no matter what they'd put in.
Deliberately flawed. How so? What did the agreement allegedly say?
Well, the report suggests it was incredibly one-sided. Mills allegedly got himself a 67% equity stake in the company.
67%? For what contribution?
That's the kicker. The investors imply it was for a pretty minimal initial input from him. Meanwhile, others who put in, up to $20,000 cash.
Yeah. What did they get?
A mere 2% equity share. 2%.
$20,000 for 2%, while he gets 67% for not much. That does sound unbalanced.
Massively unbalanced, if true. And that 67% equity wasn't just about profit share. It also gave him a 67% voting stake.
Meaning he could outvote everyone else combined? He had the final say.
Pretty much. Total control. The plaintiffs are arguing these terms were just completely unfair, didn't reflect their actual investments or work, and that it was all part of a plan, basically, for him to seize control of everything.
Which leads us, I guess, to the lawsuit itself.
Exactly. These former partners, the investors, they've sued Mills. The charges are serious. Fraud and breach of fiduciary duty.
Okay, can you break those down a bit? Fraud and breach of fiduciary duty.
Sure. So fraud generally means intentionally deceiving someone for financial gain. Breach of fiduciary duty. Well, a fiduciary duty is like a fundamental obligation to act in someone else's best interest. Think of a lawyer and their client, or maybe a company director or the shareholders.
So they're saying Mills had a duty to act in their best interests as investors, and he didn't. He acted in his own instead.
That's the essence of the breach of fiduciary duty claim, yes. And they aren't just asking for the money back. They're seeking something called a constructive trust over the assets.
Constructive trust. What's that?
It's a legal remedy. It's like asking the court to say, okay, legally, Mills might hold these assets, but because of how he got them or how he's acting, it's unfair. He's really holding them for the benefit of the plaintiffs. It tries to prevent unjust enrichment.
Got it. And they want restitution, too.
Right. Full legal restitution. Basically, trying to recover all the losses they suffered because of these alleged actions, get back what they put in and what they believe they were owed.
Now, it's really important to stress Cointelegraph did try to get Mills' side of this, right?
Yes, they reached out for comment, but at the time they published the report, he hadn't responded.
Okay, so critically, we are only hearing one side of this story, the side presented in the court filing. These are allegations.
Absolutely vital to remember that. Nothing's been proven in court yet.
Yeah.
But the details laid out by the plaintiffs, well, they certainly raise some very serious questions.
They do. And there was that other interesting detail that initially things were good.
Yeah, the report notes that. In the early stages, the investors actually said they enjoyed working with Mills. Even though he admitted he didn't have that NFT background, there was apparently a good collaborative vibe.
So the trust wasn't always missing. It seems like the breakdown really happened, allegedly, after the money started rolling in from those NFT drops.
That seems to be the timeline suggested by the lawsuit, yes. Post-success is when the alleged ghosting and the issues around the agreement and funds really surfaced.
Okay, so let's shift gears a bit. What does this mean for you listening? Especially if you're active in crypto or NFTs, or maybe just thinking about dipping a toe in.
Well, several big things jump out immediately.
I bet. Due diligence has got to be number one, right?
Absolutely. Number one, underlined, bolded, you have to vet who you're partnering with and really, truly understand the nitty-gritty of any agreements you sign. Don't just skim it.
Especially shareholder agreements, based on this case.
Precisely. You need to scrutinize them. What are your actual rights? How is the equity really divided? Who holds the power? What happens if things go wrong? These aren't just standard boilerplate docs, especially in new spaces like this.
And, maybe think twice, or at least think very carefully about projects where one founder has immense control, especially if they're relatively new to that specific area.
That's another huge point. It doesn't mean newcomers can't succeed, obviously, but that kind of power imbalance needs very clear guardrails and transparency from day one. Everyone needs to be crystal clear on how decisions are made and how assets are managed.
And the alleged ghosting, that's just basic communication breakdown.
It really is. In any investment, any partnership, communication and transparency are just fundamental. When that suddenly evaporates, especially after money's involved and revenues are generated, huge red flag.
Yeah. Going from collaboration to radio silence, that's alarming.
It leaves investors completely in the dark, wondering about their money, the project's future. It just erodes all trust.
Okay, and those legal terms, again, fraud, breach of fiduciary duty, constructive trust, restitution, they sound complex, but boil it down for us in this context.
At their heart, they're about broken promises and the legal system trying to fix what the plaintiffs see as a serious wrong. Fraud, intentional lying for money, breach of fiduciary duty, putting your own interests above those you have a duty to protect, like investors.
And the constructive trust and restitution are about getting the assets back.
Essentially, yes. Constructive trust aims to say that property should belong to the wronged party, and restitution is about making them whole again, compensating for the losses caused by the alleged wrongdoing.
But again, just to reiterate one last time,
these are allegations presented in a court filing, not proven facts yet.
Right. But the story itself, as reported by Cointelegraph, is a pretty stark reminder, isn't it, about the potential bumps in the road in the digital asset world.
Definitely a cautionary tale.
So wrapping this up, we've got these serious allegations, millions supposedly misappropriated, promises of equity allegedly broken, and now a legal fight is kicking off. It's a potent example of the risks that can definitely exist alongside the opportunities in these new digital ventures.
And it really leaves us with a big question, one for you to think about. In this often, let's face it, less regulated world of digital assets, how can investors better protect themselves? How do you ensure accountability?
Yeah, what safeguards can you put in place, both legally, maybe through smarter agreements, but also just through better due diligence up front? How do you build that trust or know when it's not warranted?
It's that constant tension, isn't it? The excitement, the allure of the new.
Totally. But this deep dive really underscores that critical need for just thorough research, super clear agreements, and honestly, a good dose of critical thinking before jumping in.